Welcome to this explainer. Today, we're unpacking the historic SpaceX IPO to figure out what's really driving this massive, record-breaking valuation. Now, if you think you know SpaceX just from watching those incredible rocket boosters land on the news, well, you're in for a pretty massive surprise. We're going to dig right into the hard data from their financial prospectus to separate the sci-fi perception from the financial reality.
Section 1. The $1.8 trillion illusion. Okay, let's dive into this. Everyone thinks they know exactly what SpaceX does, right? You build rockets, you launch stuff into space. Simple. But the financial reality of this initial public offering tells a totally different, and honestly, way more complex story. To set the stage here, we really have to grasp the sheer scale of what we're looking at. By pricing its stock at $135 a share, SpaceX is aiming to raise an astonishing $75 billion. That gives the company an unprecedented $1.8 trillion valuation, making it literally the largest IPO in history. I mean, we're talking about a valuation that has quintupled just since late 2024. That is an enormous mountain of investor money, and it demands an incredibly compelling growth story.
And man, the prospectus definitely delivers on that story. Elon Musk and the official company documents aggressively sell this grand multi-planetary vision. They literally use poetry, talking about extending the light of consciousness to the stars. They are so committed to this narrative, in fact, that CEO Elon Musk's pay milestones are actually tied to the goal of settling 1 million people on Mars. It's undeniably inspiring stuff.
But here's the crucial question we have to ask. When you buy a share of this company, are you really funding a trip to Mars? Or are you funding something much closer to home? If we look past the poetry and dig into the actual revenue streams and capital expenditures outlined in these documents, well, the picture shifts dramatically.
Section 2. Rockets, the smallest slice. Let's start with the space business itself. It definitely gets the best lines in the prospectus, but surprisingly, it actually has the smallest claim on the company's future growth. Now, to be fair, the space division boasts some absolutely incredible economics. Looking at the reality of their numbers, they're projecting massive 67% gross margins in 2025. A major driver of this efficiency? Those reusable Falcon 9 boosters. The prospectus notes they've cut the cost of reaching orbit by a staggering 85% compared to historical averages. They've essentially rewritten the math of space travel.
And this right here brilliantly illustrates the paradox we're looking at. On one hand, we see pure operational dominance. Rocket launches have increased sixfold since 2020, hitting 170 last year. But notice the stark contrast on the other side. Despite that massive increase in physical launches, space revenue only grew by a really modest 8% last year. Now, 8% is totally fine for a normal, mature company, but it is incredibly hard to square with a company whose valuation just grew 5 times over in a really short period. The rocket business, as amazing as it is, simply isn't the engine driving the hypergrowth investors are paying for.
Section 3. Connectivity, paying the bills.
So, if rockets aren't generating that explosive revenue growth, what is? Let's move to the terrestrial side of the company, because this builds a completely different financial picture. Look exactly at where the money is coming from. Starlink, their satellite internet service, supplies about 61% of their total expected 2025 revenue. It's the dominant slice of the pie. In fact, Aswath Damodaran, the highly respected NYU professor and valuation specialist, recently noted that Starlink single-handedly carried the company in 2025. It's the absolute workhorse of the operation right now.
Let's look at why Starlink is such a powerhouse by checking out these growth dynamics. You'll notice a really interesting trade-off in the numbers. The monthly revenue per user actually fell by a quarter, dropping from $86 down to $66. Now, normally, dropping prices might freak investors out, right? But look at the top line. The subscriber base absolutely exploded, literally doubling year over year to 10.3 million users in the first quarter. That massive volume growth more than made up for the price drop, driving an overall 32% climb in revenue for the segment. Make no mistake, this is the business paying the bills today.
Section 4. AI, the billion-dollar gamble.
While Connectively reliably pays those bills, we need to uncover the newest, definitely the most expensive, and honestly the lowest margin wildcard of the entire prospectus. And that's their third major business segment, XAI. When we look at where the company is actually spending its money, this number just jumps right off the page. Last year, this artificial intelligence arm absorbed a staggering $12.7 billion of their 2025 capital expenditures. I mean, that is an incredibly capital-intensive pivot for a company known for rockets and satellites, wouldn't you say? To put that $12.7 billion bet into proper perspective, that spending is more than the space and connectivity segments combined. The vast majority of the company's capital is flowing directly into artificial intelligence. And why is it so expensive? Well, because xAI's margins are the lowest among the three main businesses, and they're falling. They are getting squeezed heavily by fierce industry competition and the absolutely massive costs of building and running the data centers required to support this kind of AI growth.
There is, however, a very lucrative bright spot highlighted in the prospectus regarding this AI bet. They've successfully leased their massive Colossus computing center to the AI lab Anthropic. And the terms? Eye-watering. It generates $1.25 billion per month. But, as with everything in finance, you always have to read the fine print. This incredible revenue stream is bound by a fragile 90-day exit clause, meaning either party can just walk away with only 3 months' notice. So it's high reward for sure, but it comes with some very significant structural risk.
Section 5. The final verdict. So we have 3 very different businesses operating under one roof here. Let's bring all these numbers together to understand the incredible reality of what this IPO is actually valuing and what investors are truly betting their money on. This data is perhaps the most revealing piece of the entire explainer. It shows what the company estimates as their total addressable market, or TAM, for each sector. The prospectus claims a $370 billion market for space, which, honestly, suddenly looks tiny here. Connectivity is much larger at $1.6 trillion. But then, look at AI. They project an absolutely massive $26 trillion market for xAI. Let that sink in. According to their own documents, artificial intelligence represents 93% of the company's total potential market.
That $26 trillion projection is exactly what's driving the $1.8 trillion valuation of this IPO. But financial experts, they are definitely raising their eyebrows. Looking at that massive projection for xAI, Aswath Damodaran bluntly states that this figure borders on fantasy. The entire valuation essentially hinges on dominating a market that is not only unproven at that mind-boggling scale, but is also highly contested.
Which brings us to our final thought today. The prospectus talks beautifully about reaching the stars and colonizing Mars. But the financial data? It tells us that satellite internet is paying the current bills, and artificial intelligence is consuming almost all the capital while representing 93% of their future market hopes. So we really have to ask, what are you actually investing in here? And does it actually have anything to do with the stars? It is a fascinating question to ponder as this historic stock hits the market. Thank you so much for joining me for this explainer. I really hope this deep dive helped clarify exactly what is going on beneath the surface of the SpaceX IPO.